Welcome everybody, my name is Todd Smith, and as always I want to share some information with you about how to make money or achieve financial freedom with real estate investing. If you're watching this on Facebook or YouTube, show me some love with the heart. Show me some love with the heart on Facebook or a thumbs up on YouTube, and let me know if you're watching live or on the replay. You can just type a hashtag live or hashtag replay. Give me a shout out, let me know you're out there. And this is interactive, so I've got a topic I'm going to cover. If you have questions, feel free to ask your questions, and any questions I don't get to on the live, then I will always respond to every question in the comments, whether it's on Facebook or YouTube. All right, and your question may become the topic of my next video, so that's always a plus. Now, if you want more free information after watching this video, if you'd like to get more free information about making money or achieving financial freedom with real estate investing, I've got some other free resources for you. You can check out, I've got a 90-minute free seminar that covers a lot more in depth of what I'll be talking about today, and that's at realestateCashflowSecrets.com. My Facebook group, the name of the Facebook group is similar. It's Real Estate Cash Flow Secrets Official. That's the name of the Facebook group, so you can go there. You can ask questions anytime, and I'm actually in the group and answering questions. My YouTube channel, which is just simply Todd Smith Real Estate Investing. Todd Smith Real Estate Investing. And my website, iMentorRealEstate.com. All right, sound good? All right, so now the question I'm dealing with today is a question I got from Marcus Green, and his question is how to obtain funding to buy rentals outside of banks or hard money loans. So first of all, let's talk about the problem. Hey Darnell, good to see you out there. So let's talk about the problem that these things present: bank loans and hard money loans. So in both of these scenarios, we're out of control and we're playing by somebody else's rules, and the deck is stacked against us, all right, in both of those scenarios. So first of all, let's talk about hard money loans. For those of you who don't know, hard money loans are rehab loans, loans that people typically get to rehab or renovate a property, and they're typically used for flipping houses. All right, bank loans are typically, and the hard loan money is typically short-term money, right, because it's going to be used generally to flip a house, to fix it and flip it quickly. And consequently, the hard money loans are going to have high interest rates, all right, and high interest rates and high fees. Bank loans, you can't get bank loans long-term to buy rental property, so that's a plus. However, there's a lot of hoops to jump through. That's the number one problem. A lot of people just simply can't qualify to jump through the hoops, all right? That's problem number one. And problem number two, even if you can qualify, you can only get a limited number of bank loans before they cut you off, because they're going to say, okay, well, you're only allowed to have four properties on your credit report, or something like that. So in the world that I live in, I want to teach you how to create a business model that's not limited by bank funding or by hard money funding. All right. So the question really shouldn't be, how to obtain funding. The question is, we really don't care about the funding, right? We want the funding to buy the houses, right? So if I can show you how to buy the houses without that funding, then you don't really need the funding, right? Okay. All right. So now let's talk about the solution. So we discussed the problem. Let's talk about the solution. So we need solutions where we're in control, and we make the rules, and the odds are stacked in our favor. And I'll go a step further. We don't only want the odds stacked in our favor, but we want to set up rules and a game where everybody can win. So we're not the only person in the transaction that's winning. Okay? All right, so first of all, what's our goal with rental property? With rental property, we want to get long-term monthly cash flow, aka passive income or residual income, right? We want to get some money that's coming in whether we get out of bed or not, right? So everybody knows with the recent situation with COVID-19 and coronavirus, a lot of people couldn't go to work, right? And, until the unemployment kicked in, it was a little sketchy, right? So, but let's say you're in a situation where unemployment doesn't kick in, all right? And wouldn't it be nice to have some passive income coming in so your income continues to come in whether you get out of bed or not. All right, so that's our goal with rental property. And we want to create cash flow after 25% Murphy's Law factor. So first of all, I'm dealing with purchasing single-family homes and doubles. That's what I specialize in, doubles, which in our area is a two-family residence, right? So you got a house on, or a dwelling unit on one side and dwelling unit on the other side, separated by a wall. All right. So those are my favorite properties to purchase. But now we got a 25% Murphy's Law factor, right? Because in the real world, things break down. You have to do maintenance, and also sometimes people get evicted, all right, or people just move for whatever reason. So you have to have some money built in there, right? So let's say the property rents off for $1,000. You want to have built in a 25% factor, right? So you want to say, okay, well, this property should cash flow if I'm only getting in $700. Okay, so that's on a straight rental property. If you're doing like a rent to own, then you may be able to bump up that factor maybe to 80% or 90%. Okay, on a rent to own, but that's a whole another seminar, because you have to be trained as a landlord. A lot of landlords go out of business because they don't know how to manage their property. They try to run their business like a hobby, and being a landlord is just like any other profession. You have to be skilled and qualified and know what you're doing. All right, so that's a whole other seminar. Now, so how can we accomplish our goal of long-term monthly cash flow and cash flow that has enough cushion in there so that we have money for expenses? So the big key is that we can create deals. We can create deals where everybody wins by finding a seller that has a problem that we can solve. Most investors just look for houses that they want. Instead of looking for houses that I want, I first look for sellers that have a problem that I can solve, and then that's how deals are created. Okay, so most investors are not successful, or they get burned out because they're chasing houses. I'm not chasing houses. I'm chasing sellers with situations that have problems that I can solve. Okay, so that's the first key. It's not just all about math and numbers. It's about life situations, because every business is a people business, and especially real estate investing. All right, so we got 4 solutions to deal with this funding issue. Number 1 is lease options. Number 2 is subject to financing. Number 3 is seller financing. And number 4 is private money. All right, so let's deal with the first one, lease options. So in lease options, I don't need a bank loan. Okay, I'm going to go and approach the seller that has a problem that I can solve, and I'm going to rent their property as a renter, but I'm also going to have the right to buy it. Okay, and I'm also going to be responsible for, I'm going to take the responsibility off of them for routine maintenance of the property. All right, now if there's a catastrophic situation that occurs, their insurance is going to cover that. All right, as far as the maintenance of most people don't want to become landlords because they're afraid of the maintenance issues and the tenant hassles. So this person that I'm dealing with is not a landlord. Usually they could be a landlord, but usually they're not. All right, there's somebody that just end up with an extra house that's going to be vacant. Maybe they got a job transfer or something like that, and I'm going to take over their property, and I'm going to rent it, and I'm going to let them know that I'm going to have the right to sublease the property. Right, so I'm going to sublease it at a higher rent than what I'm paying. Right, so that's where my cash flow, my monthly cash flow, is created. So then I said one of our goals is long term. Right, so depending on the seller situation, I may be able to rent that property on a long term lease. Okay, and that's really what happens in the corporate world. Right. In the commercial real estate world, they typically have long-term leases. All right, that's very common. In fact, the city of Hong Kong was a long-term lease. So you can Google that. Yeah, but the city of Hong Kong was a long-term lease. All right. But anyway, so lease options. So I can control the property like a tenant, and have a lot of the powers of an owner. When a lease option, I have the power to sublease it, and I have the right to buy it. I've got my rent set that I'm paying the seller, and I'm going to rent it out for a higher rent to create my monthly cash flow. The difference between there. Okay. The next thing that I can do is I can do subject to financing, which is also called getting the deed or taking over the seller's mortgage payments. So in that scenario, again, I don't need to go get a bank loan because I'm using the seller's existing bank loan that they already got. Right. I'm just going to continue making payments where they left off. And again, I got to make sure that their payment is low enough that I can rent it out on the open market. So for the last 10 years or so, mortgage rates have been very low. So these the current existing mortgages lend themselves to that very much, right? So I wouldn't be able to do that with the hard money loan. Plus, the hard money loan will be short term. All right. So then the next scenario is seller financing. So again, with seller financing, the seller may or may not have a mortgage on the house, but basically, I'm going to negotiate. I got a clean slate, right? I got a clean slate, so I can negotiate whatever terms I want with the seller. So I can negotiate the interest rate as low as I want, and preferably zero. All right. But I can negotiate the interest rate as low as I want, and I'm always being cognizant that I can get that cash, the monthly payment amount that I got to pay my seller has to be significantly lower than what I can get on the market rent. All right, that's the whole key, right? Because if we can't get the payment rate low enough, then we're not accomplishing our objective of getting this cash flow that comes in and can pay for our expenses whether we get out of bed or not. All right. And then the last scenario is private money. So in private money, instead of going to a bank, I'm going to go to in the last scenario, seller financing, the seller became my bank, right? In this scenario, private money, I'm going to go to a private individual, probably a busy professional, maybe a doctor, a lawyer, engineer, could be a janitor, okay? Could be anybody that basically is living below their means, right? So they have disposable income coming in, and they have some money set aside in savings and in an IRA or maybe a 401k from an old job that they used to have, and I can negotiate a low rate with them, right? Because think about it, they're going to put their money in the bank at some ridiculously low interest rate that's far less than 1%. So they might instead of them putting their money in the bank at 0.25% or 0.5%, right? And then I go to the bank and borrow money at, let's just say 4%, right? It make a lot more sense. Let's cut out the middleman, and I can give a private individual, I can pay them 4%, right? Because the bank's going to take their money and loan it out at a higher rate. So why don't I just pay them the higher rate that I would have borrowed from the bank anyway, right? So they come out ahead, I come out ahead, and it's a win-win situation, all right? And their investment is secure because they got a mortgage on the property, all right? So that's 4 different scenarios where we've, in 3 of those scenarios, we're avoiding funding altogether, and then the last scenario, we're creating funding with a private individual outside of a bank. So in the first scenario, there's no loan required because I'm renting the property. In the second scenario, subject to, I'm taking over the seller's loan, right? So I don't need to go get a new loan. In scenario number 3, seller financing, the seller is actually going to become my bank. And then on scenario number 4, private money, a private individual is going to become my bank. So bottom line, I don't need to deal with the banks at all. And again, why don't I want to deal with the banks? Because number 1, they have a bunch of hoops to jump through. And number 2, even if I jump through other hoops, they're going to try to limit how many houses I can buy, right? So I don't want to have a business that's constructed based on the idea of how many houses they want to allow me to buy. That's not freedom, all right? That's being shackled. I don't want to be shackled, right? I want financial freedom, and real estate has allowed me to have that, thank God. And so I don't deal in that world. So in buying over 100 properties, I've never gotten a bank loan to buy an investment property. So, and you don't have to either. And so, again, this question was submitted by Marcus Green. How to obtain funding without going to a bank or hard money lender. So remember, if you want to get more free information on how you can make money with real estate or become financially free with real estate investing, check out my 90-minute free training seminar at normally $297, but I'm offering it free for a limited time at realestateCashflowSecrets.com. You can check out my Facebook group at Real Estate Cash Flow Secrets Official. Check out my YouTube channel, Todd Smith Real Estate Investing, and check out my website at imentorrealestate.com. So until next time, may all your parents have rich children, and may all your children have rich parents. Thank you.